Hi friends! Bitcoin miners are now going through tough times with the crypto market seeing the biggest sell-offs in 7 years. Shares of mining companies are on the bear run as well. With the profitability of the mining industry at record lows, the selling pressure on Bitcoin has soared by an impressive 400% over the past 3 weeks. Miners now have to sell off their assets and equipment due to the mining hash rate at a new all-time highs, high electricity prices, and of course, cheap Bitcoin. Bitcoin was on a selling spree last week. On November 21st, the flagship cryptocurrency plummeted to $15,600, the low unseen in 2 years. The price then slightly recovered amid a rise in the equity market and consolidation of the greenback ahead of the release of the FOMC minutes on Wednesday. Despite the attempts to grow, digital gold keeps trading in the range below 17,000. In the past 7 days, Bitcoin showed a modest increase in value with the weekly high seen at $16,945 on November 18th. The sellers then pushed the price below 16,000 and Bitcoin tested the support level of 15,500. The digital asset is now trying to recover while hovering at around 16,485. The price chart of Bitcoin American dollar shows the continuation of the bear trend with resistance standing at $16,500. In fact, Bitcoin risks sinking even deeper if it fails to break through resistance. The first resistance level is seen at around 17,000. If the price goes well above the barrier, the quote may then head toward 17,500 or even 18,500. Meanwhile, without a breakout, the price may go down from 16,000 to the key support level of 15,500 and even plunge below $14,000 per coin. So is there any chance for Bitcoin recovery? Indeed, the crypto market is now in turmoil. The collapse of FTX shocked the crypto industry, and now one more crypto exchange, Genesis, is on the edge of the abyss. The news broke earlier this week when Bloomberg, citing sources familiar with the situation, reported about the struggling crypto exchange. It was after this report that Bitcoin tumbled to its lowest level since November 2020 on Monday. Genesis ran into trouble soon after the FTX collapse. Last week, the crypto brokerage announced their decision to temporarily suspend redemptions and new loan originations in the lending business. The firm is now in talks with potential investors for at least $1 billion in fresh capital. According to Bloomberg, Genesis sought funding from Binance, the world's largest crypto exchange, and Apollo Global Management, a private equity powerhouse. Genesis also said it has $175 million stuck on the now bankrupt crypto exchange FTX. On November 11th, FTX Group, which includes about 130 additional affiliated companies, filed for Chapter 11 bankruptcy proceedings in the US. Its founding father, Sam Bankman-Fried, lost $16 billion and stepped down as the company's CEO. Later, he sent an apologetic internal corporate letter to employees, ensuring them he would do everything in his power to resolve the crisis. We likely could have raised significant funding. Potential interest in billions of dollars of funding came in roughly 8 minutes after I signed the Chapter 11 docs, he mentioned in the letter. Meanwhile, James Bromley, a lawyer representing the now bankrupt crypto exchange, said that a substantial amount of the firm's assets were stolen or missing. More than 50% of Bitcoin addresses are now in loss, and the company owes $226 million to its largest creditor. This company was run by inexperienced, unsophisticated, and potentially personally compromised individuals, James Bromley emphasized. The media also reported that Sam Bankman-Fried was able to quietly use customer funds for his trading firm Alameda Research. Meanwhile, FTX new boss John Ray condemned the former CEO and the company, saying he had never seen such an unprecedented and complete failure of corporate controls. According to multiple reports, FTX executives used corporate funds for purchasing at least 19 properties worth nearly $121 million in the Bahamas. On the other hand, the FTX collapse shows the crypto industry needs to be regulated. More and more experts, including those from JP Morgan and the Bank of England, say that crypto exchanges need a more thorough audit and their clients need full asset transparency. By the way, despite the recent events and skepticism surrounding the crypto market, JP Morgan is still optimistic about blockchain technologies. The bank has recently registered its trademark for a crypto wallet. This has been our wrap-up of the crypto market. InstaForex TV wishes you a productive trading week and wallets full of funds. See you in our next video.